Hello and welcome. My name is James Kelly. I'm the Head of Aviation Finance at KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to welcome Peter Barrett. Peter is the CEO of SMBC Aviation Capital. Peter has joined us here in SMBC's offices in Dublin in December 2025 for the purposes of our Aviation Leadership Series. Peter, welcome.
Thank you, James.
And thank you for joining us. Maybe before we get in, it's been a really landmark year for SMBC AC. Do you want to maybe just give us a very quick, as we sit here in December 25, overview of the business and where you're positioning that business in the aviation leasing market?
Sure. So SMBC Aviation Capital is one of the largest aircraft leasing companies in the world. Today we've an owned, managed and committed fleet of close to 1,000 aircraft. We've been, in fact, next year, 2026, is our 25th year anniversary, so a landmark year for our business. We're owned by two very large and very successful and need-committed Japanese shareholders, Sumitomo Mitsui Financial Group and Sumitomo Corporation. And we have a global business, 100 plus customers around the world, 75% new technology portfolio. So a long-term established player in the aircraft leasing industry. Probably 2025 is a landmark year for our business because SMBC Aviation Capital, along with our partners, Sumitomo Corporation, Apollo and Brookfield, have agreed to the acquisition of Air Lease Corporation, and we hope that will close in the first half of 2026. So that will be indeed a landmark transaction, not just for us, but I believe for the industry. And we will be both an investor in the business and will also be the servicer of the portfolio, what is today the ALC portfolio, which will bring the total portfolio that we are either own or service to over 1,200 aircraft today, and then a large order book which will be taking into SMBC Aviation Capital of over 400 aircraft. So it'll be a big 2026 will be a big year for us, and will be an even bigger business, and hopefully be able to offer more service to our customers, both airlines and investor customers. So I think it's going to be a really exciting year.
Well done in 2025 as we come to the end of the year. If you maybe just start, Peter, by just broadening it out and just look at the market generally, right?
Sure.
And what's your sense of the airline market, the strength of your customers, and maybe just ask you to break that out between the different regions, so EMEA,
Sure.
ASPAC, and the Americas.
Yeah. So look, I think generally, the airline market's in a pretty good place. So I mean, if you think about it, it's been such a turbulent and dynamic 5 years over the last 5 years. Obviously you have COVID, you have the war in Russia, you have a lot of geopolitical events. But I think what we've seen is that, across all of that, is that the continued importance of air travel to both consumers and indeed to the global economy generally. And, so airlines we see around the world are generally doing well. Passenger demand is robust. I mean, I travel a lot with our customers all over the world. And one of the reasons I like to do that is I like to be in our customers' airplanes, in the airport, seeing demand, seeing what it's actually like for the consumer. And, airplanes are full, load factors are good, airports are busy. And that's broadly across the piece. So generally I think the demand side is good. There are certainly cost pressures, and I think that's a message you'll hear right across the piece. And that's in a number of different dimensions. Labor costs, the costs of maintenance of aircraft, just general costs in the system, and it's a theme around the world. There's some pressures there. So yields are probably under a little bit of pressure, but generally airlines are making money, they're performing well, and the tone you get is generally positive. Now, obviously, there are exceptions to that, but the forward booking curve, how people are feeling about, when you look at what their plans they're making for the longer term, generally people seem to be in a reasonably good place. Yes, are there some airlines that are challenged? Of course there are, but that's kind of more normal. I mean, you've got hundreds of airlines around the world. Some are going to do really well, some are going to do okay, and there'll be a few that will struggle, and that's going to vary from market to market and time to time and circumstance to circumstance. So it feels like a kind of a normal market. Generally, people are doing well, and as I said, the tone from airlines is, I wouldn't say, they're not saying everything's perfect, but they're generally saying, it's a pretty decent market and they're all doing pretty well.
Okay, and just to touch on one issue that obviously rose up during 2026 is geopolitical tensions, be it tariffs, some of the tensions globally. What's your perspective on if that is having an impact on the consumer in the short term? I think you touched on there, maybe it isn't, but even out into the medium term, do you worry it might have a bigger impact?
Yeah, I think it does tend to have, pockets of issues. For example, I think the U.S. airlines were stopped for flying into Venezuela recently. There's been some tensions between Japan and China, which has, maybe impacted some travel patterns. But those things tend to be localized and also tend to be relatively short term. The things. The other comment I'd make, James, and as you probably know, I'm doing this a long time. There's always geopolitical tensions, and perhaps we feel more acute, or we talk about them more. But there's always been issues. I mean, when I started, back in the early 90s, there was the Gulf War, and then there was SARS, and there was 9/11. The geopolitical dynamics and things, they happen, and they're always going to happen, and they will have an impact. But I think you need to stand back and look at the long-term secular trend of our industry, and that's pretty good. That's pretty consistent. And I think, we learned many lessons, I think, from COVID, but I think a really important lesson, and it's one of the reasons I believe, the industry has the aircraft leasing industry and aircraft financing industry is doing well at the moment, is that, air travel it comes back. I mean, even in the worst scenario where everybody stopped flying and there's, all this, and I remember during COVID, people saying, oh, people never travel again, and people never go to conferences again, and people will be doing virtual this and virtual that. That hasn't happened. Travel is an important part of human nature. Aviation is a force for good. It's an important economic and social driver in our societies around the world. And yes, there are geopolitical dynamics and pressures, but I think in the long term, yes, they have. In the short term, they have effects, but in the long term, I think the industry, the long term prospects for the industry are pretty good.
Okay. You touched on earlier your order book, the large SMBC AC order book, and also the order book you're looking to acquire from ALC if everything goes to plan in 2026. So you're well positioned just to talk about for a moment around the OEMs, right? And maybe across two pieces. One, do you think some of the supply chain issues, OEM challenges that we've had are starting to ease up? And maybe a related question then, how does that play into SMBC AAC's thinking on your fleet strategy, your trading strategy over the next couple of years?
Yeah, I think the supply chain issues, I think it's a story of 2 steps forward, 1 step back. And you're even seeing that in the last week or 10 days. Some challenges, in this case with Airbus. And I have no doubt that Airbus will manage them, and it'll be, but it's still another bit of grit in the system. And I also think that generally, the market talks about getting back to pre-COVID or things being back to the way it were. I don't think we're ever going back to that.
Yeah.
I mean, the world has changed. We talked about tariffs and geopolitical tensions. The technology has changed. The complexity of what the manufacturers are doing, the scale of what they're trying to do has changed. It's just a different world. So I think the expectation that we're all going to go back to where we were is I don't think that's going to happen. Will things improve? I think they have to improve. But do we think we are going to have a system that's all going to be running perfectly on rails? Everybody's going to be getting everything on time, and there's going to be it's just a bigger, more complex system, and I think that's going to have an impact. So I think we'll always have things like, the system events or supply chain issues or technical issues that are going to impact on it. But it is improving. To be fair, it is improving. So we see, obviously, the fact that Boeing is now back up to kind of a reasonable rate of production. I think they've definitely turned that corner and are doing well. I also think that the quality is better coming out of Seattle, and that's really positive. There remain significant challenges on the engine side, and it's not just simply a question of technology. It's around availability of trained people to do the work. It's around the availability of the shops and the physical infrastructure. And the manufacturers and the OEMs are making good efforts to build that out, but it's going to take time. So I do think it's going to improve, but it's not going to be overnight. I do think we're looking at that, some challenges through the end of the decade. And I think, as I said earlier, I do think that it's a more complex and more it's a different world today than it was 10 years ago for lots of different reasons. So therefore, I think we need to manage our businesses in the expectation that there is an element of unpredictability in the supply side. So from our perspective, then, the second part of your question, we will, assuming that the transaction will close as planned, we will have an order book of, depending on when it happens, of 400 to 500 aircraft between the two order books. The vast majority will be narrow-body aircraft, delivering between now and the end of the decade. We think it's a good asset for the business. I mean, demand is good for aircraft. Lease rates remain, good. Like most lessors, we're well placed out into 27. We're now placing airplanes in 28 and 29. So I feel that it's a good position to be in. We've what we're hearing from our customers is that they need to continue to plan for growth, fleet replacement, fleet adaptation as they try to develop their businesses and perhaps having more 321s or more Dash 10s, and so there's lots of interesting things happening on the fleet side. So we feel we've got a good order book at a good time, and we're looking forward to working with our customers as we play through the rest of the decade.
And if I just, Peter, just tease out the comment you made on engines, and particularly maybe new technology engines. 500 aircraft are in order. You've at least 1,000 engines coming into your shop over the next sort of 5 or 6 years. What's your perspective on where the engine OEMs are at in getting their head around some of the technological issues that have arisen, understanding the maintenance cycle, the reliability of those engines, and how that's developed in 2025?
Yeah, I think there's been some progress on that. Frankly, not as much progress as we'd like. I mean, we've seen some things like the durability kit that we put on the LEAP, which we'll hopefully see on the B-type as well in next year. Obviously, the GTF continues to have some challenges. There has been improvements. We do see a path through to the end of the powder metal issue, but it's going to take longer perhaps than we would have initially hoped or expected. And it is getting better, but getting better at a pace perhaps we'd like it to be getting better more quickly. And that's just something we're going to have to manage, okay? Yeah. It's difficult for everybody. It's obviously particularly difficult for the airline operators because they have to manage delivering for their customers, and that unpredictability is a challenge. And I hear a lot of frustration from our customers, airline customers, in that regard. But I think the technology itself is, once we get to a mature phase, and it's taken longer to get there. It always takes time to get to a more mature phase. And look, no technology is perfect day one. I think the technology in these engines is taking longer to get to that mature state. And then I think the big question, I think, and excuse me, it's unresolved, I think, is the balance between the costs of maintaining these engines and the durability of these engines versus the benefits of operating them. And that, I think that's probably a different bargain, certainly today, than people would have bought into when they ordered the engines probably 10 or years ago or something. And we're going to have to see how that bargain develops over the next number of years. I also think, and perhaps something we'll touch on later, I also think it's the lesson for the OEMs is that, yes, technology advances are really good and important, but you need to understand the impact of them and the cost of them and the operational reality of them. And I think that's going to, frankly, give a lot of food for thought for the OEMs as they think about technology into the next decade. So look, it is getting better, but I'd like to get better more quickly.
Okay. If we combine the two comments you've made today, so a reasonably strong consumer and airline demand environment, a constrained supply environment, has probably seen lease rate factors strengthen, if we look back in the last 2 or 3 years, quite significantly. I'd be interested in your perspective on where we are in, if we call it, the lease rate factor cycle, and maybe just to break that down across aircraft types and what you're seeing.
Yeah, look, I mean, lease rates they've improved, really significantly in the last number of years, by 30, 40, 50% higher than they would have been 2 or 3 years ago. And that's a combination of factors. Part of it's driven by, we're going for a particular low post-COVID or during COVID. Demand is, that recovery in demand has driven different lease rates up. The supply issue, which we've just touched on. If you've got one of the big manufacturers, Boeing, not making airplanes for a long period of time, there's less airplanes, and that has an impact. There's also interest rates. I think interest rates are an important factor. When people talk about rates, lease rates, 3 or 4 years ago, we were looking at historic low interest rates. Interest rates have gone up. Lease rates, an important input cost into lease rates is the cost of money, and so that's going to drive them up as well. So rates have increased significantly, and they're holding steady, I would say, and probably chipping up a little bit over the last year. Not the same pace, but they're definitely at a good level, and I think holding at that level. I think different aircraft have different dynamics. So, for example, I think wide-body rates were particularly weak during COVID. I think they probably had the greatest, but they had the furthest to come, and they've gone up. They've gone up a lot. I think that remains the dynamic. The larger capacity narrow bodies, in particular 321, rates are good for that airplane. I think. We obviously would like to see the Dash 10, the Max 10, get certified and get into production, because we think that'll be an aircraft that will have demand, and I think that'll attract good rates. But we need to get the airplane flying, and used airplanes as well. Actually, rates are good. I mean, we're particularly seeing aircraft that we would have COs and NGs that we would have perhaps extended or during for a couple of years during COVID at pretty low rates. I mean, they're going up by 100 plus a month, $100,000 a month, into the mid 200s for used airplanes, and that's a pretty good rate. So yeah, rates are good, and I don't see. I mean, you'll have some fluctuation. I mean, if you have an unsuspected supply of a couple of airplanes in a particular sector, you might get a little bit of a softness in it. But demand is good. I mean, we have over the last couple of years, there's been a number of airplanes we've taken back from customers in different circumstances, and we placed them quickly, and we've got good demand for the airplanes. And even at the moment, I think if we had more airplanes, we could probably place them. So I think rates are going to be stay where they are in that zone for the foreseeable.
Okay, if we just flip around for a moment to, we've had some bankruptcies over the last little while, some on the regional side, but particularly maybe Spirit in the US. In one sense, there'll always be bankruptcies, right? It's just part of the business. But I'd be interested in whether, as you think of the business, are there pockets or business types within the airlines that maybe looking into 2026 you're more concerned about?
I don't think so. I mean, I think, look, business, first, I completely agree with you, James. I mean, when the ALC transaction closes, we expect to have 170 plus airline customers in our owned and serviced fleet. I mean, there's always going to be winners and losers. You get many customers, so it's part and parcel of doing business. So that's something we plan for and manage for. I think circumstances tend to drive in different markets tend to drive different behaviours. That could be individual market dynamics, it could be competitive dynamics, it could be financial structures, it could be over leverage, which often happens with airlines. And I think, so I don't think there's a direct read across. And you mentioned Spirit, which is one of our customers, and we're working with them obviously in their bankruptcy. But I don't think you can read across from that situation to some other situation, and people have been trying to do that. I don't think that read across necessarily happens. I think the circumstances are driving that particular market, and that particular counterparty are different to, for example, what's happening in Europe or what's happening in Asia. But so there's not a particular type of airlines, not a particular market that I would say, we're really focused on this. There are customers that we're saying, okay, we need to keep an eye on them, and that could be because of their business model, it could be because of the individual market, it could be because of their balance sheet, it could be a number of different factors. So it's always going to be a combination of things. I think frankly, I think it's overly simplistic to say, this is what happened here, or therefore that's what's going to happen everywhere else. I don't think it applies like that.
Okay. Depends on the individual customer.
Correct.
You guys have always been very active in the aircraft trading market, right? Bought and sold a lot of aircraft over the years. Can I get your perspective on where you think aircraft values are in that secondary market? Sure. And who are the buyers? Who's turning up the portfolios that you guys might be selling? Yeah,
so it's look, it's a good trading market for aircraft. If you had asked me this time last year, and I'm sure Joe probably did, that's probably the area where I said, okay, let's see how the year goes. Interest rates are, a bit higher, a bit of uncertainty around the geopolitics, tariffs, all this kind of stuff. But the aircraft trading market has proven really resilient, so there's strong. We'll have our best year ever for trading aircraft this year. Yeah. And we're selling a very wide range of aircraft. We're selling some new aircraft. We're selling, midlife, older airplanes. We're selling narrow bodies, wide bodies. We're selling lots of different types of counterparts in terms of airline lessees. So it's it's a good market. And values are good. I mean, we're selling. I mean, you'll see it in our numbers. I mean, we're selling airplanes for good prices consistently across the piece. And I think there's a number of reasons behind that. I think one of the most fundamental reasons, which I already touched on, is I think a lot of investors and pools of capital around the world are looking at places to put money at work, and they look at aviation and they look at the last 10 years and the challenges of the last 10 years, but then they look at the outcomes and they look at the recovery and they look at the supply and demand thing. So they look at all the things and say, yeah, look, this is a pretty good space to invest. Are you going to get, are you going to knock the ball out of the park in terms of returns? No, but are you going to lose your shirt? You're not. And that's what, aircraft assets are. They're good, steady returns. Yes, there will be ups and downs, but they're physical, they're real assets. They have real demand, they have real cash flows, and they do recover. So I think that's become an important theme as to why people are looking at aircraft investments. And then at the next level, there's sets of fundamentals, and I think there's just a lot of different markets are in a good place at the moment. We do a lot of business in Japan, the JOL market. That remains. Japan Inc. is doing well, so there's lots of corporate profits. Again, a lot of investors there have seen the cycle and see how things work. So I think they've see that yes, there can be tough times, but these assets do have real value. So that's a good market for us. We also see some new money coming into the market. So we've sold a number of aircraft to a European wealth fund here this year. We're seeing some other smaller lessors buying aircraft, or they're trying to build out portfolios perhaps for ABS. It's been a very, I would say, varied and substantive buying market. We also tend to work hard. We've got probably one of the biggest trading teams in the business, and that's a conscious decision on our part, because we think there's lots of different markets. You got to work them. You got to be in touch with them. Some of them wax and wane. Some of them want different things. So our team works hard to ensure that we see all of the potential buyers, and I think it's proven to be a good strategy because we trade to a very wide variety of people. So, and it's a good market, and frankly, the bid remains strong. So I expect it to continue into 26.
Yeah, I was just going to ask you, like the trends you touched on are all medium-term trends in one way, right? As the aircraft as an investment asset, you're seeing that strong 24, 25 extending into 26. And
yeah, beyond. Certainly, yeah, and I think there's look, I think we have more bids than we have aircraft at the moment, and we could sell more aircraft than we have, or want to sell, and that's a reflection of a deep and pretty a pretty consistent market. So. Look, there can always be event risk, and I'm doing this long enough to know there will be, and we should never assume it's going to last forever. But it feels like a pretty good, stable market at the moment.
The interest rate environment. So this is possibly always a dangerous question to phrase it this way, but it feels like it's becoming a little bit more stable. If interest rates can ever be stable, but maybe just to get your sense on what the current interest rate environment, rates have come down, how you're thinking about that, both from your own financing strategy, the strategy maybe of some of the vehicles that you support, either a service or providing aircraft into, and what you think the outlook might be.
Sure. Well, I think, James, you're right. I mean, it's very hard to predict, and as we speak, I think there was a rate cut overnight of a quarter point. There seems to be some divergent views in the Fed. Obviously, there's going to be a new chair of the Fed in the new year. So it's hard to predict. And look, we're not in the business of interest rate trading. That's not our business. My sense is I think we're in a period of reasonably stable interest rate. There's probably some risk on both sides of the curve. I could see scenarios where you could have more significant cuts if the U.S. economy doesn't maintain its current generally consumers are under more pressure. I could also see where inflation could become more of an issue. But I think the base median case is probably in the zone where we are today. I think that's good for the industry and for trading. Now, our strategy is around funding and liability. The liability side of the balance sheet is critical for an aircraft leasing company. It's if you can't get that right, it's hard to get everything else right. Now, we're fortunate and we have very strong and supportive shareholders, but we also have a very wide range of, we go to a lot of different types of markets. In the bond market, we were there a couple of weeks ago, had a very successful 10-year issue, at the peak, 5 times oversubscribed. but also we have a very strong relationship with the bank market. We do a lot of bank financing there. We also do a lot of long-term strategic financing in Japan. So we try to have a broad range. We also try to a very important thing for us is to actually, to manage our interest rate exposures, to try and manage our assets and liabilities. And we will have, I think, we've got the smallest, I would call, funding gap in terms of maturities, or maturity gap of all the big lessors, because we like to have, if we've got a fixed income, we like to have a fixed liability against that, and to hedge our book as much as we can. So, and we'll obviously, in the current environment where rates are good, and particularly where for margins are good, we'll take advantage of that, as we did a couple of weeks ago.
Okay, and maybe just to pick up on that transaction, I'm really interested in your comment on it being 5 times oversubscribed, right? So are the investors looking to participate in those type of transactions? Your view, is that pool getting wider? Is it more diverse? And what's your sort of sense as you look into 26 and the bond market?
Yeah, I think, I think in SMBC Aviation Capital, you've got one of the strongest rated entities. You've got somebody who is, one of the bigger and going to be an even bigger business. So I think that we tend to attract, as some of our peers do, a larger number of bids, more interest.
Peter, just to pick up on the comment on your most recent bond issuance being 5 times oversubscribed, be interested in, are the investors coming into a bond issuance like that? Are they getting more diverse? Is the pool getting deeper? And what attracts investors to that issuance?
Yeah, I think there's a number of factors at play. I mean, I think there's a general industry thing. I think that what we talked about earlier about aviation being kind of seen as a stable, attractive, real asset place. Having said that, I do think that the bigger players tend to get more purchase. I mean, we've got one of the strongest ratings in the industry. So I think what works for big players like SMBC Aviation Capital, I don't think you read that right across the entire industry, although, many leasing companies have done pretty well in the last couple of years in that market. So I think it's going to remain a good market for investors. Okay.
So maybe just to pick up on a comment you made about the strength of your credit rating, we have seen some rating upgrades for lessors generally in 2025. Your sense on that, Peter, right? Is that maybe the rating agency starting to really understand the business a bit better? Maybe it's down to the strength of the balance sheet of individual lessors, but maybe my real question is, do you think it'll continue? Do you see more upgrades for lessors in 26?
I think potentially yes. I think the reasons behind it are the things you talked about. I think there is a better, there's more track record. We've been through more. I think we've had the downside scenario of all downside scenarios. Yeah. You can actually point to the evidence of what happened during COVID. You can point to the evidence of the Russian recovery. You can point to real things. And I think that does help. I think performance is important as well. I mean, I think leasing companies have performed well. And then I think as well that there's a number of more lessors looking for ratings, and I think that just means there's more conversation about it with it. So I think that helps as well. Are there more upgrades? I mean, look, upgrades are hard, so I wouldn't assume that. I wouldn't just join 2 points and then continue it's going to go up. I think there's a natural cap for all credit ratings. But I do think there is probably more upside than downside in the current environment for ratings. Yeah.
Maybe just flipping into the bank market, right? So if we go back a couple of years ago, there was maybe some concern that maybe somebody, particularly in Europe, some of the players have started to exit the market in aviation with Basel and etc., causing some challenges. Your sense of where the bank market is as we sit here in December 2025, right? Has it stabilised those participating in it on the aviation side, and indeed are there new players starting to come into the bank market?
Yeah, I think it is changing, okay, and it continues to change. I mean, when I reflect back, 10, 20, 30 years ago, US banks and European banks tended to dominate, and then Japanese banks a little bit further back. That's changing. There continue to be active players from Europe and the US, but they're not, they're not as many of them are, and they're not as active as they would have been. On the other side of that, you're seeing people, a lot of Asian banks, a lot of regional banks in Asia, places like Singapore, Taiwan, China, Korea, the Middle East. So there's more activity. So I think it's a market that's evolving and changing and developing. We think the bank market is an important source of funding. It's not going to work for every counterparty, and I think the higher grade counterparties will have more traction there for unsecured lending. but it is an important market and one that we think is going to continue to, I think, evolve and develop. And again, I mean, my experience over the many years, it does tend to be it does wax and wane, and some banks come in and they pull back and they come back in again. And that's always going to be the case. But I think you've got to look at it in the aggregate. I think in the aggregate it's been pretty consistent. The nature and type of players in it tend to change, but the overall shape and size of it probably is pretty consistent.
Okay. Peter, just to pick up on a comment you made earlier about the ABS product, right? So historically, SMBC AC has the airspeed portfolio, for example, has participated in that market. But you touched on yourself earlier that some of your buyers are using it as a source of funding. So how do you think about ABS into 2026? Is it more, it's great because that gives liquidity to our buyers, or is it something you might look to participate in yourselves?
Well, the first thing I would say is that, the ABS market has improved in 25, and I think it's going to strengthen into 26. And we think that's a good thing for the industry. I mean, even if we're not using it directly ourselves, it's another source of liquidity for aviation, and that's inherently a good thing. We will, as a counterparty that does most of our borrowing unsecured, high investment grade, strong investment grade ratings, it's not a tool we're going to use to fund our business directly. If we see a good bid on the E-notes and we see good bids on the secured debt part of it, that will all add up to a good price for us trading aircraft, it's certainly something we'd look at. We've also, as part of our M&A activities, have inherited a number of these transactions, and they've proven to be quite useful and helpful and interesting from our perspective. So look, yes, ABS is important. We keep a very close eye on it, both the macro, and we'll also keep a close eye on it from our own. Tactically, it might be a good thing for us to use. So we'll always watch that space.
And just the one comment you made there about the E-note, that we probably in 25 have seen AABs and sort of similar debt type instruments come back, but no real E-note transactions other than maybe secondary trading. Do you think they could come back, or is there more work needed before we get there?
I think probably. I mean, I think 26 is the year we might see it come back. It's always a fairly, it's a pretty specific market. I think you need a lot of things to align for it to work. But I could see, there's certainly talk about it. So I could see it possibly this year. Getting the whole capital stack done from A to E is difficult.
Yeah.
You don't get a lot of them done. But I could see it happening this year. Circumstances need to be right, needs to be the right deal, the right investors, et cetera. But yeah, I think it's possible.
Okay. Maybe you've touched on the ALC transaction, Peter, and being respectful, maybe you're in the middle of that process. And so insofar as you can talk about it, just maybe a standback question of what attracted you to that business, right? So what was the thinking on the SMBC AC side as you looked at that business and put together your portfolio of partners?
Sure. Well, I suppose, first of all, I suppose at a macro level, we feel that scale is important. We think in a maturing, commoditizing industry, scale is relevant on many dimensions. It's relevant, we think, for our customers. We think it's relevant in terms of the supply of aircraft we have for them. We think it's relevant for the suppliers. We think bigger, stronger counterparties for the OEMs is important. We think it's very relevant for the investor market. So scale is important, and I think we've seen that. That's pretty evident as we've seen the industry develop over the last number of years. So scale is important. We felt that in ALC, it's a very, it's a good business. It's got an excellent portfolio. It's got a strong team, and we also felt it was probably a business that was at a point where it was relatively clear that there was an opportunity to have those conversations, and we felt it was an interesting conversation to have. We said it's a good quality business, and then in terms of the structure, we wanted to make sure that we optimized the use of our own capital. We wanted to make sure that we mitigated it's a very large transaction, brought in good partners, so we spoke to a small number of people in terms of people we knew well, and after a lot of hard work and a lot of discussions, we came out of a structure we felt worked both for us as a investor group and for the seller. So obviously it's still subject to all the closing conditions, and we're in the process of that, so I won't comment further. But we think it's a transformative deal for our business, and we believe for the industry as well.
Okay, and your comment around consolidation, Peter, right? We've seen kind of the world where we've had one, maybe two big transactions over each of the last maybe 5-6 years. Maybe people expecting it to accelerate, but it's always been that 1, 2, maybe 3 transactions. Do you think that kind of trend will continue, or do you see there might be an acceleration of the consolidation across the industry generally?
I just think it's going to continue, James. I mean, people tend to talk a lot about consolidation and that it's kind of, there's something new. There's always been consolidation in our industry. Go back to GPA and GCAS, Bouillon, Sale, so these transactions all have happened. They tend to happen. I don't think there's a particular pattern. I think yes, you need to have a willing buyer, but you also need willing sellers. So a lot of times the circumstances of the individual, the strategies of the owners of these businesses, and there'll be lots of different things that will input to that. A myriad of things. So I think trying to predict, when and how these things will happen is, I think, very difficult to do. But I think you can say it is likely to continue, and I think that sense of you're going to have a smaller number of bigger lessors, that is going to be a continuing theme.
Okay, just as part of that, those transactions, and you touched on yourself, Peter, you would have, I'm sure, had lots of discussions with investors over the last, 6 to 12 months. And you touched on earlier about the attractiveness of aircraft as an asset class. Do you think there's new money coming into this sector, and there could be more, kind of more mature, longer term capital that might come in? Insurance type money or pension type money or kind of alternatives that haven't necessarily come into the industry historically, they could now be attracted into it?
Yeah, sure. I'll make two comments. In answer to that is yes. Comment just in, so we've been talking to investors all the time for years. Okay, so this isn't something that we kind of happened upon in the last 12 months. We have always been of the view that bringing different types of capital, different pools of capital together for different transactions is a good thing. And certainly, both in terms of this transaction and indeed the feedback we got since we announced the transaction, I think there's a lot of capital out there that is interested in this space. I think they see it, we've touched on this, as a predictable, stable, real asset, real cash flow business. And I think, and one of the reasons we're doing this deal, and one of the reasons we think it's potentially transformative, is we think it's, there's more of these types of deals to do, and there's more pools of capital that we think are going to be interested in this space, and working with established global players like ourselves. I think it's a very interesting model. So I think the answer to that is yes. And look, the evidence of that is replete across the piece. I mean, we talked about trading earlier. We talked about the bond markets. 35 years ago when I started this, aircraft financing and leasing was a very niche kind of, somewhat left field thing. It's become much more mainstream. There is a huge demand for aircraft financing as the manufacturers continue to produce aircraft, as airlines continue to need them. There's a lot of demand for capital in this space. It's relatively predictable. It's a pretty decent return. So I think that's a journey that's going to continue. We're going to see more and different types of capital coming into the industry because we need it over the next decade.
And it sounds from what you're saying is that the servicing of those portfolios is going to be an important part of S&P CAC's own business, right? So you obviously have a very large own portfolio, but you, from what I'm picking up, would see servicing, or other investors' portfolios being a big part of your business going forward. Is that fair?
That's fair, absolutely. Because I think you have to do both. I mean, I think being a principal and deploying your own capital is really important, and it gives great returns, and it's an important part of it. But there are literally billions and billions of dollars to finance. We're not going to finance it all by ourselves. Of course we can't. So bringing other partners in, we've got an established network of relationships with airlines, with trading partners, with the OEMs, all the things that we do. We can work with other partners so that we can help them deploy capital and give stable, reliable returns in combination with ourselves. So we think that's a really important part of how this industry is going to develop. No one leasing company can do everything. Of course they can't. But what we can do is work with partners so that we can give the broadest range of services to our customers and the broadest ranges of products to our investor partners. So we think it's a really important concept, and one that I think is going to drive aviation finance into the future.
Okay, really interesting. We've talked about the trading channel, we spoke about the M&A channel, the sale and leaseback channel just for a moment, and SMBC, are you looking to actively participate in campaigns? What's your sense on how rational that market is at the moment, on lease rates, on people who are coming to the table?
Yeah, look, I mean, we have always had the view that you need to be, sourcing aircraft from different channels. So we have an order book. We both sell but also buy aircraft from other investors, and we do sale and leasebacks. And they tend to wax and wane depending on particular parts of the cycle and market. So, for example, during COVID, we deployed very significant capital $6-7 billion in the sale and leaseback market, which is some great deals. We continue to be active in that market, but it is clearly much more competitive. And I'd say we swing a lot. We don't hit that often, but we do some good deals, and where we want to and we can support our customers, we will. It's competitive, but as a big player with access to lots of different types of capital, we can be competitive where we want to be. But it's not like it was 3 or 4 years ago, and that's why we have an order book, and that's why we do a lot of trading. So it's you're trying to get that mix and balance right. But sale leaseback certainly has a role in our portfolio development, and that will depend on where we are in the cycle and the counterpart and lots of different dynamics. But yes, we are still active in the sale leaseback market.
I've asked you one very specific question. Just overnight, you guys announced a significant deal with United, a 20 aircraft sale and leaseback deal. Do you think that's the shape of things going forward, that maybe the bigger lessors are doing 20, 30, 40 aircraft sale and leasebacks rather than the kind of onesie twosies you might have seen historically?
Yeah, I think it depends as well. It depends on the customer. But I certainly, our view and our experience has been that airline customers like deals of scale. They like that kind of, it's just more efficient. They like counterparties who they know can do something consistently over a long period of time. So I do think you're going to see more of those kind of larger tranche type of deals. And for someone like United, we've done a lot of business with them over the years. They know we can deliver. They know we're a long-term player. They know that we'll manage those aircraft well. They know that we'll manage them in terms of how we trade the book. So I think you're going to see more of those types of deals. And clearly, there's smaller airlines where ones or twos are
good deal.
What they do and what they trade. But for a lot of customers, and United is just one of many deals we've done over the last 10 years of scale. Doing a big tranche of airplanes with a competitive counterparty like SMBC Aviation Capital is a very attractive proposition.
Can I go off script for a minute and maybe take you right back to you touched on the start of your career in the early 90s and the GPA legacy. It's 50 years since GPA in 2025 was set up. So the question I'd like to be really interested in your thoughts in how you've seen over your career, starting out with GPA, a really small, innovative team, to where we're at today with really big transactions, including the transaction SMBC have undertaken this year. Just the biggest changes you've seen across that time and your own career.
That's good. Apart from getting older, it's a big change. I suppose, as you said, it's 50-year anniversary, and I was fortunate enough to be able to attend a celebration down in County Clare a couple of months ago for that. It was great to see a lot of my old friends and colleagues from that time. And for me, that was a very formative part of my career. I think, I've still a lot of the things that would guide how I think about our industry. I learned both good things and, frankly, not such good things. I learned in those few years. I think in many ways, the industry has changed completely. In other ways, it hasn't changed at all. So the fundamental product we offer to our customers, and this is obviously somewhat of an oversimplification, but the leasing product, the aircraft operating lease, is fundamentally the same product. I think what has changed is the capital that actually comes into that to allow us to provide that product. That's where I would see the greatest changes on the liability side, on the capital side, on the funding side, and the products that are used in that regard. And also, I would also see the biggest change is that, 35 years ago when we started doing this, leasing was just a niche product. It was, 10% of the market share, probably less. It was, used by relatively fewer airlines, very often used by weaker airlines. It's become much more mainstream. So, leasing is the dominant product that airlines use to acquire aircraft. It is used by pretty much, you just talked about United, it's used for everything from the strongest and biggest airlines in the world to new startups. So it's become much more of a ubiquitous product, and that's because it's a fundamentally good product. It fundamentally makes sense, in my view, that airlines should focus on the operations, on flying the aircraft, and getting the product right, getting the passengers into the execution of the product. And big financial players like SMBC Aviation Capital, and others should focus on the capital side. We're better able to do that. So I think looking back on the last 35 years, the fundamental thing we provide to them is the same, and it's become more popular because it's a good product for airlines. But how we do it in terms of capital and structure and the types of businesses that we are, GPA is a wonderful company, but it's fundamentally a different business to someone like ours. it's changed a huge amount. So everything changes and everything stays the same. I suppose that's probably part of it.
I'm picking up a lot of optimism into the future from our discussion, but maybe what are the major trends as you look into 2026? You sense you're reasonably optimistic, but what are the big trends you're looking for as a CEO of this business?
Yeah, I think. Well, I suppose in the immediate view, I mean, obviously we got our large transaction with our partners that we want to complete and get that that executed well and deliver for our investors and our customers and our people and all that. So there's a focus on that. I think that a theme that's been running through this conversation is I think we're going to continue to see that those new pools of capital coming into the industry, new ways of financing the industry. There continues to be huge demand for aircraft and demand for capital for that aircraft, and I think our job as industry players is to find smart, innovative ways to bring that capital in, so we can give the best product and services to our airline customers. I think that's going to be the theme, not just for this year, but for the remainder of this decade. I also think that there's, we touched on the supply side and the manufacturers. I think that journey is going to continue. I certainly hope we'll see the continuation of 2025, where there's been some improvements, and that we got that more predictability and consistency. And I think that's going to will continue, but there's a bit of road to go on that. And then finally, I think, aviation. The story around aviation, I think, it continues to be a positive one. One of the things we talk about a lot in our business is that, it's good to stand back sometimes and look at aviation. It is a force for good. I mean, aviation is yes, it has its challenges. Yes, we need to address things like sustainability, which remains an important challenge for our industry. But as an industry, we promote economic and social activity. I think we're a force for good in the world, and I think that's what gives me the optimism and the positivity, is that I think we need to continue to work hard to deliver that, because air travel is a good thing for people around the world. It expands horizons, it gives economic opportunity, it reunites families and friends, it breaks people into new worlds and new perspectives. So being part of that and being part of that journey continues to excite me, and I think 26 is going to continue to be an interesting year. We can't predict the future, but I do know that aviation will continue to play an important role in the global economy next year and for many years to come.
Okay. Well, Peter, first of all, good luck in closing the transaction in early 26. I hope all goes to plan, and continued success to you and SMBC Aviation Capital. I think our listeners will really enjoy that conversation. So
thank you, James. Thank you.
Thank you.